Good evening to you. In business news at this hour, South African consumers are feeling increasingly pessimistic about the economy. That's reflected in the FNB BER Consumer Confidence Index that has plunged to -20 in the first quarter of this year. This represents the lowest level since the first half of 2023 and signals a worrying outlook for consumer spending, especially after a strong end to 2024. FNB Chief Economist Mamello Matikinca Ngwenya discusses this further with us. Thank you so much, as always, for your time, Mamello. It has been noted that consumers are feeling increasingly uncertain and that VAT hike that's on the horizon is likely to slow down spending even further in the coming months. Tell us about that effect.
Good evening to you, Admisang, and all the viewers. So I think, yeah, indeed a quite surprising outcome with the survey that we conducted a couple of days, in fact, after the budget speech or the initial budget speech was proposed. And it is quite clear that it did dampen consumer sentiment. So even though the actual outcome was much lower in terms of that VAT proposal of a 1 percentage point increase over a period of 2 years, it appears that this did weigh on sentiment quite a bit. I think it is also obviously worth noting that during this period, we also did see some level of load shedding, which could have contributed to consumers not feeling as optimistic. And added to that, just geopolitical tension and uncertainty around the timing of the survey also may have influenced the outcome. So, of course, we take quite a bit of information from the survey, just in terms of consumers' willingness to spend. So that's the key insight that we draw from the survey. And it certainly does suggest that consumers will approach the second quarter in a more cautious manner, given the decline or the extent of the deterioration that we saw in sentiment.
You touched on the geopolitical element in this regard and those souring diplomatic relations between South Africa and the US, as well as the impact of trade wars, have weighed heavily on sentiment. To what extent, though, particularly if we are to decipher it for an ordinary South African who may think, I buy locally, and we are encouraged towards localization, so how much of this has an impact?
Certainly. So I think for your higher earning consumers, they would obviously be monitoring what's happening in the markets and how things like the currency would have reacted to the noise and the level of uncertainty. Of course, we have seen some relative stability in the currency, but this is something that they would be looking out for, which is why we saw that, when you break down the survey by income groups, we saw your high income earners actually report consumer confidence of -30 from -4, as they would be a bit more sensitive to that level or that type of news. But for ordinary South Africans, your middle to income or low income households, that VAT proposal and the 2% that was initially proposed, and then eventually that 1% that would then come through over 2 years, and the fact that there were no inflation adjustments to income tax brackets and medical aid tax credits. So this is now for a second consecutive year. We would say that weighed more on consumer sentiment.
What's to be said then about the results of the recent monetary policy easing and the current hold on the interest rate when it comes to consumer sentiment? Has that had a little bit of positivity?
So I think that is quite important. So in as much as we've started to see the central bank last year, they eased monetary policy, and at their last meeting decided to keep rates on hold. Interest rates are still relatively high in South Africa relative to where we've been historically. And I think if we add to that, consumers did find a bit of relief from the retirement fund withdrawals, and we're expecting that to decelerate a little bit compared to where it was in 2024. So yes, the central bank kept rates on hold, but inflation is still relatively high. Added to that, you've got higher taxes for consumers we think this, of course, has a significant bearing in terms of how consumers engage and how they perceive, things like their household finances or their financial outlook, and whether they rate the current time as the right time to buy durable goods. So those would be key contributors.
As a parting shot, is this picture likely to get better? Of course, at the beginning of this year, we were touted to be a South Africa that is tipped for economic growth as well as forecasts of improved economic activity.
Sure. So I think, a lot will depend on the ability to implement some of these structural economic reforms that will add to economic growth. So I think for us, if you strip away the consumer's participation in economic activity, consumer spending is a significant driver of overall growth. So if one strips that away and actually looks at underlying growth, so here we're looking at the productive side of the economy or investment activity, that has been very muted. So one would have to see those elements or investment activity and production starting to improve, which we take a constructive view. As FNB, we do expect a gradual improvement in economic activity as we see investment spending improve. Confidence will improve, but it will probably take a bit of time before we see it at the levels that we've seen historically, or it's actually just, reverting to the long-term mean. So those low-hanging fruits, investment activity, a boost to the production side of the economy would have to come through first before we see a sustained improvement in consumer confidence.
Thank you, as always, for your contribution. FNB Chief Economist Mamello Matikinca Ngwenya talking us through the latest Consumer Confidence Index.